Welcome, everyone, to another episode of Capital Ideas, where we celebrate the ideas that enrich our lives and the capital process that turns those ideas into reality. I'm Dara Albright, co-host of Capital Ideas and a proud board member of ICAN.
And I'm Mark Hiraide, Senior Legal Director and Policy Counsel at ICAN.
And today we're joined by Kerrigan, who's the president and CEO of the Small Business and Entrepreneurship Council. Karen is one of the world's leading experts on policies and initiatives that benefits entrepreneurs, startups, and small businesses. And Karen joins us today to discuss how President Trump's recent executive order, which aims to open up 401ks to alternative investments, including direct investments into private equity and private credit, could be a watershed moment, not just for retirement savers, but also for America's small businesses, the lifeblood of our economy. So thank you so much, Karen, for joining us.
Oh, it's a pleasure. Always a pleasure to see you. And thank you all for everything that you're doing in your space. It is so important to who I represent, entrepreneurs and small business owners.
Exactly. Now, so it's interesting. A lot of people are talking about this executive order and what it means for retirement savers. And, you have people on some ends of the spectrum that are against it, saying that, this is too risky for retail investors, retirement savers, to, proponents that believe in diversification and think that this is very important for retirement savers. But really, no one I've heard so far has been discussing the potential impact on small businesses, innovators, innovations, entrepreneurs. So I'm so excited to talk to you about that and really get your insights. So let's get to that part of it. How much capital do you think that this executive order could potentially unlock for America's small businesses and in the entrepreneurial sector in general?
Oh, significant. I can't give you an exact amount, but what we could talk about is, sort of the value, of the whole defined contribution space. $13 trillion almost in assets and 401ks alone, 8.7 trillion in assets. This is significant capital that for the most part has not been available to private markets. So you're talking about the unleashing of a lot of capital for innovation, for entrepreneurs, for small business growth. So it is significant. And I mean, and that's the argument that one of the arguments that we've, been making, that this really could, look at when we do our surveys, we just came out with our latest small business checkup survey in July. 50%, of the small businesses in that survey, including startups, continue to say that access to capital is restraining their growth and their investment opportunities, along with workers. I mean, access to skilled workers. So, again, we need to be looking at reforms and changes across the board that can unlock capital. And this is a huge one. This is big.
Aaron, I think you may have recently noted that the small businesses can already offer private market investments in 401k plans, but most don't, I assume, because of the litigation risk. The executive order directs the Department of Labor to create safe harbor protections or to evaluate them. How much has litigation risk really kept 401k capital from flowing into private businesses?
Well, I think it's been the big reason, or one of the big reasons. I mean, look at if you're a small business, you're looking across your business and across your operations that way that you can limit, any type of litigation exposure. And when you look at the total tort costs in this country, which are $347 billion, small businesses pay about 50% of that. So they're particularly vulnerable, when it comes to litigation risk, litigation exposure, because the stakes are higher when they can't, afford the cost of lawyers. But if you have a lawsuit like this, I think in this space can really put a small business out of business overnight. So they're going to stick with, certainty. And in this instance, they're going to stick with, the vanilla type plans like stocks and bonds, as opposed to offering alternative investments. So, yeah, so something needs to be done to, again, provide a safe harbor, to come up with clear rules, governing fiduciary duties on these investments. And that, I think, is sort of the crux of the issue. And, luckily, it's one of the things that, will be a big focus in this executive order.
Is your thinking that 401ks participants in 401ks essentially should be able to direct their own investments without the oversight of a fiduciary intermediary involved? In other words, allow the individual beneficiary employee to invest his or her own funds without having to be concerned about a planned fiduciary.
I think what I'm thinking is, in terms of the rules, at the end of the day, what they're going to look at, like, is there be some clarity around this, that is, as long as employers do X, Y, and Z, and as long as, employees understand the risks, that, and employers have done certain things, specific things, that currently are not clarified, that they'll be protected, right? Because, I mean, the employee themselves, they do have to take a certain, look, it's risky business, right? I mean, investing, but if there's that balance, and then as long as there's specific things or identifying, standards, that will provide, and as long as the employer says, look, I did this is what we've done the education, we've done X, Y, and Z, that they'll be safeguarded from potential litigation.
Right. It's going to be very interesting with the dynamics of the accredited investor definition, the possible revision of it, because for many retirement savers, they're not accredited. And so, I think the SEC is going to have to come up with some rule making in regard to what kinds of disclosures will they require for non-accredited investors, because that's an area that historically is required registered level disclosure for non-accredited investors.
Right, right. When I think about this, Mark and Dara, this as well, on the investment crowdfunding rules, right? In terms of allowing ordinary people to invest in businesses. I mean, there was the little checklist, you know what I mean? That, before they made that investment, do you understand that this is high risk, that you can lose your investment? There's no guarantee of a return. There was that piece of education that the platforms, right, had to carry out in terms of, allowing these types of investments. So, but yeah, you bring up the other dynamic of accredited investor. I mean, that's sort of a parallel, type of proceeding and reform that the executive order also directs. And we see some movement, moving, on that issue in the Congress as well. But I have to say, the accredited investor definition, in terms of expanding it, has big bipartisan support, right? It shouldn't just be about income and net worth, that if you do have a professional experience, that if you do have background, that if you are licensed in doing something, that you could qualify as an accredited investor. And I know there was another piece, that passed the House as well, in terms of an SEC administrated type of test, right? That would be done. So, but all these work together, Mark, right? And I think that's why, rightly so, the executive order says that the DOL, who's doing the ERISA, right? The ERISA governed rules and guidance in this regard, needs to be working with the SEC along with the Treasury, because it does all work together. And you don't want to have, well, this is allowed here, but not allowed there. You want that certainty across the board, right? And that's sort of stability that will make this all work.
It's really interesting. I had no idea just how much small businesses are disproportionately affected by the litigation as opposed to the large businesses. So I'm just going to take just a second to give ICAN a plug on that. And thank God that there are, for, organizations like Investor Choice Advocates Network that, that will actually provide pro bono legal services for some of those smaller entities. So,
right. Yes.
But, it's interesting, I was reading in your recent article, and you said 85% of private businesses 85% basically, need, of our businesses are tapping into private capital. And, I'd be curious to hear a little bit of what it means on the ground. Like, we hear, he said trillions of dollars coming in from retirement capital. Is there any kind of metrics or studies done to show how much in job creation will that, will that, turn into, something like that?
I don't think there's any forward-looking, type of studies, and I think there should be one because, and they can look at sort of what the current numbers are, right? In terms of 2024, the PE-backed companies, what they look like. We know that the medium PE-backed company, has 72 employees. So you're talking really about a small business, right? And 85% of PE goes to mid-sized businesses, SMBs. And, in terms of what's generated, I mean, it's significant, close to $4 trillion, from these companies, and their suppliers, and sort of the secondary effects, not just the direct, the secondary effects, and, 3.7 million jobs. I mean, just, sheer the sizable GDP, hit, that, our economy gets from this type of activity. And when people think about PE back, they're like, oh, Silicon Valley and, now Austin maybe, right? But PE backed companies are everywhere. They're in 50 states, they're in every congressional district. I've seen all the studies. And, the bottom line is that we have a great foundation in terms of, the PE space and, more companies getting backed by PE, which means there is significant room for growth in terms of more money, right? That is needed. And like I said, with 50% of the businesses in our surveys, saying that, access to growth capital continues to be an issue that restrains their growth and their competitiveness, there's a need in the marketplace. So when you look at the economic impact of PE currently, that it's largely small businesses, that are benefiting from this in terms of when you look at the scale, there's a lot more room for growth, particularly given, a lot of all the changes that we're seeing in Washington on the tax and the regulatory side, and a lot of the certainty now, in terms of, tax regulation. Trade's another issue, but I think we'll land somewhere eventually. But so there's a lot of optimism and confidence in the small business community. And let me bring up one other number to, Dara and Mark. When you look at the number of people who are filing business applications, each and every year for the past 4 years, it is off the charts. Okay. It's over 5 million businesses. Not all of them will actually launch, but there is the correlation between the higher amount of people who are filing business applications and starting new businesses. So there are a lot more people interested in starting new businesses. There's going to be a lot of opportunity in the manufacturing, energy, healthcare, across all sectors, technology with AI. So this is going to be capital that's going to be needed, which is why I'm really excited about this EO, because we need these types of sources of capital, to fund, the engine, as you say, Dara, of growth and innovation in the United States.
What I found was so surprising, but in a good way, was that it allows the retirement saver to allocate that capital directly to the business. It doesn't have to go through a fund. So I think that was completely shocking to me and groundbreaking on so many levels, because that changes the way that even that these companies are able to go out there and try and get their deals into investors' hands.
I agree. And sort of it all works with, what's, the progress that we've made on investment crowdfunding, right? In terms of, and again, sort of that direct access, that true democratization, to these deals and to these businesses. And again, I think, the proliferation we'll see, I think, a significant amount of education. I do, it's going to be in everyone's best interest, right? The business offering these plans, the businesses that wants this capital, the ecosystem in general. And, yeah, I think it's all going to be good, but there will be some investor protections, as there should be. You know what I mean? There should be some basic things, again, standard types of things that are common sense and are not over regulatory, right? Or that cause more confusion or more perhaps litigation risk, for small businesses. So one other thing I'd like to mention is, there's on the one side, you do have businesses, small businesses, entrepreneurial startups, that are going to benefit from, bigger pools, larger sources of capital, right? That can fuel their business growth, their startup and their business growth. But on the other end too, I mean, one of the big issues of business owners and entrepreneurs is access to employees and competing for these employees, right? I mean, having, good benefits, good plans, 401k plans, healthcare benefits, things like that. And again, I think this is sort of a little bit, this is like an equalizer, right? I mean, if small businesses are able to directly, they're offering these plans, I think this is going to be a big benefit, for these businesses to be able to say, yeah, we offer these plans that allow for investments and we'll match investments, we'll do whatever. So I think it also opens up that space for small business owners in terms of being able to compete, for the employees that they need, the skilled talent that they need to compete against bigger players, to scale their firms, and basically to compete in the global marketplace.
Yeah, I think given the size of the retirement asset base, even if, under traditional portfolio analysis, small slice is allocated to this asset class, that's still a large number and would be very helpful to businesses. I mean, one of the concerns or thoughts I have is, I think one thing we learned from investment crowdfunding, retail investors tend to invest smaller sums.
That's right.
And, how do we make these kinds of private investments available to smaller individual retail investors? They're probably not going to be investing as much as, say, certainly an investor would invest in a private equity fund, which kind of raises the issue of securitization and asset tokenization of securities. That's an interesting thought, that perhaps retail investors can access these investments through fractional interests.
Yeah. Yeah. I mean, I think there's going to be different types of tools and different types of models and different types of, different things that are going to emerge, you know what I mean? That are going to take advantage of this. So I think there'll be things that things that we didn't expect to happen in this space that will too. But we'll have to see. I know with small business owners, I know, when it comes to their business, when it comes to their employees, they're not going to take big risks. They're going to start slow, in this regard too. So, right. I think there's still going to be, this is going to be a great opportunity for them in terms of offering, offering these types of investments, but they may start slow, or they may, they're going to work with their peers or talk with their peers and see what actually works. So it's going to be interesting how it develops, and there will be that adoption phase, right? And that rollout phase. And, there could be tweaks and changes along the way. But I mean, I just am very excited that ordinary people are going to have access, to these types of investments. And I think that's really, that's just amazing. And that it's really going to open up significant capital for small businesses. So that's the other piece, that I'm just very, very excited about.
Yes, I think that, the real concern that people will have, rightly or wrongly, is loss of retirement assets.
Right.
I think, as we were discussing, the SEC will have to come up with disclosure rules to ensure that investors are protected.
Mm-hmm.
I know, Karen, you were very involved in the Jobs Act, which, among other things, kind of, as you say, democratized capital access by, for the first time, allowing companies to raise capital from non-accredited investors using general solicitation under regulation crowdfunding. You think we talked about some lessons that we've learned, i.e. small investments by individual investors. Can you think of any other lessons that you have learned through your experiences and being so involved with the Jobs Act that might apply to this area?
Obviously, the EO it talks about guidance. It talks about regulation, right? It says make the appropriate regulatory changes, provide the appropriate guidance. I think, one of the lessons is I would hope that they move a little bit more quickly than what they did in, the 4 long years, right, that it took for them to implement the law. I mean, that was like a long time. So, I mean, obviously, you don't want to be speedy and fast for speed's sake. You want to get it right, right? But I think, doing this in 6 months or a year, 6 months, 180 days, they give the DOL to come up with rules is a really good idea, to move this along. I would say the other piece is we do need this more like locked in terms of a regulation as opposed to guidance, because, guidance can be new guidance can be issued the next year, the next month, in 6 months, in the next administration. And, that could drive a lot of uncertainty and bring us back to where we are right now. So I think, having some type of a regulatory proceeding where you are opening up that regulation that's governing, sort of these new alternative investments to a wide range of stakeholders is going to be a really good idea. And getting their feedback and their ideas, and then actually locking in a regulatory change, because that will offer some type of certainty and some type of protection in the long term, because you're going to have to go through another regulatory proceeding if you want to do everything, right? So I think principles, protections, there was a lot of specificity, and, some things that we continue to change, in the Jobs Act that we're still trying to get changed now and clarity around now, right? In terms of pitch events. and so the more clear, the more, they could be, in terms of the guidance or the regulation, we hope it's a regulation, I think the better, for the long term. And, it's something that can be done, much more quickly than 4 years.
That's an excellent point.
Yeah.
Well,
Really.
the Jobs Act was enacted in, I think, early 2011.
Yeah.
One of the things it did was it directed the SEC to promulgate the rules for crowdfunding, Regulation CF. Those rules were not finally adopted until, May of 2016.
Yes.
You're right. That was 5 years. Now, this is a different administration, and so we may not have that kind of reluctance. And the other issue that you raise is, I think the Jobs Act was very specific in the legislation. And
Yes.
yeah, and so, perhaps the commission felt constrained by the specificity of the statutory provisions, and maybe this time it'll be a little different.
Yes, absolutely. But if there's that, but I will, but you're right. We should think of, parallels. I mean, we could think about parallels in legislation and other regulatory proceedings, and sort of, as sort of guide for ourselves, like guidelines to follow moving forward. And I think we need to think back, on that same piece, on the Jobs Act, and how that we could say, hey, look, at this work, this didn't work. Why don't we do that with this next sort of round of regulatory changes that we're going to make? I think that makes total sense to do that.
And it's interesting, I know, to basically even just go one step further with that, it was Congressman McHenry who originally wrote the original
Yes.
crowdfunding legislation on the congressional side. And he notoriously said, not even focusing on the length of time it took the SEC to implement his bill. He said there was some quote. He said the SEC took my 2-page bill and turned it into 500 pages of rules. So it's another lesson too. We could keep it very concise. We don't have to, create 500 pages out of a 2-page bill either.
Right. I mean, that's what creates the complexity, the problem, why you don't have small business participation. I mean, there's a lot, in the crowdfunding rules right now that we need to change and improve, right? I mean, to really, open it up to more small businesses and really blow it wide open. But yes, I think, simplicity, common sense, sort of guiding this whole proceeding is going to be very important. But again, I do like the fact that it is sort of a collaboration across agencies that matter, in this proceeding, because you don't want conflicting rules and regulations, right? And have to continually fix things. So I think that's really important that from the beginning, they're all working together.
And look, what this does, it really takes America back to America's roots. I mean, we were a country that was founded on the principle of the freedom to invest in and profit from the ingenuity and innovation of our fellow citizens. And, most people are only able to do that through their retirement portfolios. So, this takes us back to where, back to that focus of freedom and our founding principles.
Right, right. And for many people, the choices, right, are so limited, given that, the growth, IPOs just have not been super healthy. And, everyone, big dollars all chasing like the same, whatever, 50 to 100 companies, right? And so, yeah, I think it is, sort of that, I mean, there is that risk and reward. And I do think, the educational piece, I think we'll be very strong in this regard. It's going to be the best interest, I think, of these plans, to have that education, up front, and for employers to play a role in that as well.
Yeah.
Well, Karen, what's your message to small business owners listening today who are wondering how this executive order could affect their own growth opportunities?
Well, once we sort of see, once we begin to see what's stirring in the agencies, right? Whether, at the DOL, the SEC, or Treasury, a lot right now, the action will be at the DOL in terms of what's going to happen. If there is a formal comment or, rulemaking period or an opportunity to comment, I would encourage business owners to, whether they're PE backed, and this will be great, for more businesses in their community, or their businesses, or businesses looking for capital, just the importance, comment on this in terms of the importance for, the small business ecosystem, access to capital, also there for their competitiveness and being able to offer these great plans and, give their employees, rewarding, opportunities to build retirement wealth. But to get very involved, in the process, because their voices make a difference in terms of moving it forward and bringing it to reality. So, and, folks can visit our website, sbecouncil.org. We'll be posting those opportunities to comment, to get involved. My latest, op-ed in Real Clear Markets is up there. Our statement, in support of the EO, the executive order. And we're going to have a lot more information, on this specific topic, as well as all issues involving access to capital. There's so much happening on the Hill beyond this, which we're excited about and in the administration. But it's really important that business owners get involved, and their voice be heard in this, because we'll have better rules, we'll have a better outcome, and, their voice matters, in terms of how this will impact them.
Well, Karen, thank you so much for joining us today. It's clear that unlocking retirement savings for private market investment could be a real game changer, not only for workers building their nest eggs, but also for small businesses that power our economy. And as long as it's done safely and prudently, I think we're in for a lot of good things to happen.
100%, Mark. Thank you so much. And thank you for having me.
Oh, thank you so much. And for everyone else out there, if you want more information on ICAN, please go to icanlaw.org, and we'll see you on the next Capital Ideas.